Welcome to the Mortgage Foundations podcast, where we are here to guide you through the ins and outs of the mortgage world. Get ready to unravel the complexities and gain a solid understanding of everything you need to know about mortgages. Whether you're a first-time homebuyer or a seasoned homeowner, we've got you covered with expert insights and tips. Let's dive into the fascinating world of mortgages together. In today's episode, Tyler Cowell, the principal broker of Mortgage Foundations, FSRA number 13614, will cover the minimum down payment for a home purchase.
If you're considering taking the big step towards homeownership, it's essential to understand what's involved when it comes to your finances. When purchasing a home, you'll need to make a down payment. This down payment is the initial amount of money you pay towards the total purchase price of the house. It's important because it affects several aspects of your home buying process, like mortgage approval, monthly mortgage payments, and even your interest rates. Your down payment becomes your initial equity in the property. The minimum down payment requirement varies depending on the purchase price of the home. If the house is priced at $500,000 or less, the rule is quite straightforward. The minimum down payment required is 5% of the purchase price. However, if the purchase price goes above $500,000, things change a bit. For the portion of the house price above $500,000 and up to $1 million, the minimum down payment jumps to 10%. Let me explain this in more detail. Let's say you're looking at a home that costs $600,000. We'll take the two brackets into consideration to calculate the minimum down payment. For the first $500,000, the minimum down payment is 5%. That would be $25,000, 5% of $500,000. Now, for the remaining $100,000, which falls in the second bracket, the minimum down payment is 10%. So, for that portion, you would need an additional $10,000, 10% of $100,000. Adding those two figures together, your total minimum down payment for a $600,000 home would be $35,000. Now, it's important to remember that the above minimum down payment requirements are for homes that will be owner-occupied. If you're purchasing an investment property or a second home, different rules may apply, and you might need to make a higher down payment. Let's focus on owner-occupied homes for now. Now that you know the minimum down payment requirements, you might be wondering why they exist and what they mean for you as a home buyer. The minimum down payment is there to protect both you and the mortgage lender. By requiring you to have some skin in the game, it reduces the risk for the lender. It shows that you're committed to the purchase and have some financial stability, which gives lenders confidence in your ability to make mortgage payments. On your end as a home buyer, the down payment has a significant impact on your financial situation. Let's break it down. The higher your down payment, the less you'll need to borrow from the bank in the form of a mortgage. This means your monthly mortgage payments will be lower, which can ease your financial burden. It also means you'll pay less interest over time, saving you money in the long run. On the other hand, if you have a smaller down payment, you'll need to borrow more from the bank, resulting in higher monthly payments and more interest paid over the life of the mortgage. So it's in your best interest to save as much as possible for that down payment. Now, let's talk about where your down payment can come from. It's not uncommon for home buyers to use their own savings or investment accounts to fund their down payment. Accumulating that amount may take time and careful budgeting, but there are also other options available to you. For instance, you can receive gifted funds from a direct family member, or you can use funds from your First Home Savings account or your registered retirement savings plan through the Home Buyers Plan. This program allows first-time home buyers to withdraw up to $35,000 from their RRSPs without incurring income taxes. Keep in mind, however, that you'll need to repay the withdrawn amount to your RRSP over a specified number of years. Some lenders and insurers also have special programs that allow you to use borrowed funds for the down payment. However, these programs do have higher insurance premiums and different approval requirements than a mortgage with a traditional down payment. For a property with a purchase price of $1 million and more, the minimum down payment is 20% of the full purchase price. As you can see, the minimum down payment for purchasing a home is an important aspect of the home buying process. It can affect your mortgage approval, monthly payments, and overall financial well-being. It's important to carefully plan and save for your down payment, as it can make a significant difference in your home ownership journey.
In this episode, We discuss the minimum down payment when buying a home, providing clarity and understanding for potential home buyers. We hope you found today's episode informative, and don't forget to hit that subscribe button to stay updated for our next episode. Thank you for tuning into Mortgage Foundations, and remember, every home starts with a foundation. Your mortgage should too.